Hello, everyone. Today we're going to introduce Norway's economy, which is a highly qualified country and one of the most developed countries in Europe, while it is also known for its economic stability.
So, if we look at Norway's GDP, so it's in kroner, the currency seems to be following an exponential trend, nowadays reaching around 5.7 trillion. So, from this century, in terms of GDP, only irregularities we see are from the crises of 2009 and, of course, COVID. However, compared to other countries, Norway managed to keep them at like quite a low level. So, overall, GDP seems to be continuously expanding, which is a great sign of economic health and good management from the country. Now, if we check the key components of GDP, apart from its rich natural resources, including oil, gas, its continental shelf, and its rich seafood, the main sectors would be agriculture. Indeed, grass based livestock is about 75% of Norway's agriculture. To this, we add the utility and public administration sector, and then we add construction, manufacturing, and mining. These all include discovery, extraction, production of anything that has to do with oil, gas, as well as any metals they do have. And a big part of the manufacturing process also deals with the maritime industry of Norway. Moving on to the next slide. Direct foreign investments. So FDIs for Norway refer to the total value of investment made by foreign entities in local businesses. Norway is a very attractive investment destination because it's part of the EEA, the European Economic Area, which allows the four freedoms. So the four freedoms ensure free flow of capital, personnel, and services, as well as goods between Norway and the rest of the countries in it. This obviously promotes trades, reduce barriers, and encourages people to invest in Norway. So the first investors are the United States. About 20% of all FDIs come from them, followed by Sweden and then Finland. However, while the US is the main investor, in terms of region, Europe actually takes first position because of its combined portfolio, which makes up about 65% of the entire um, FDI economic investment.
Now, talking about the role of the government, the Norwegian government is very active and involved in critical sectors of the country while enhancing active management and taking strategic decisions. Norway is very rich with oils and natural gas, as well as rich in seafood industry, creating this vast and stable, prosperous economy. The government stimulates economic growth, creates new job opportunities, and enhances Norway's competitiveness on the global stage and fosters welfare. Norway has set up a pension fund, officially called the Government Pension Fund Global, which is an indicator of the country's excellent financial management and long term vision. Most of the revenues of the oil and gas sector of Norway are becoming part of the fund, which then in return will be utilized to support public expenditures, investment in infrastructure, education, healthcare, and other social programs. Talking about the petroleum industry, the government has taken very specific actions about the pollution that might have been caused by this sector. The regulations that have been placed regarding this sector are very strict to minimize carbon emissions, protect marine ecosystems, and promote renewable energy alternatives. And by using more green technologies and sustainable practices, Norway has been able to reduce its carbon footprint since 2022. In addition to its financial significance, the Norwegian fund commits also to ethical and responsible investment, while it does not invest and support companies that involve dangerous activities such as weapons, tobacco, and severe environmental damages. The government has restricted the fund to integrate the environmental, social, and governance factors into the investment decision, seeking to promote sustainability. And finally, the government controls key areas such as the vital petroleum sector and maintains control over a number of large scale enterprises, some of them fully owned and some publicly traded, but where the government has controlling interests.
Okay, so let's focus on the key industries of Norway. The most significant contributor to Norway's economy is petroleum, which makes the second most renowned oil exporter after Saudi Arabia. The second most important industry is the maritime industry. It's also considered as a maritime cluster, suggesting it has the knowledge, the skills, the labor, and shipping means. And they have put in place Salmar, which is the first fish farm at sea. And they have also developed their own vessel, which is called the Yara Bike Line, and is the first electric dependent ship with zero emissions, which has only benefited their offshore activities. And it is inevitable to mention Norway's hydropower as it is the biggest producer in Europe. 90% of Norway's electricity is used through hydropower, and some cities like Lillehammer have imposed on the population to have petroleum free cars, which shows Norway's initiatives and aspiration for the future. On to the recent years' development. One of their most developed program is the Energy for Development. Their city helped 18 million people, where 10.5 million managed to get access to electricity and 7.5 million were able to improve their electrical appliances. In terms of maritime sector, the Norwegian Ministry of Culture and Equality created a declaration of cooperation with industries to include more equality between genders and the sector. And lastly, one of their most successful achievements in attaining renewable energy is the exploration of a phosphate deposit through Norwegian miners, which is the second largest deposit. And the outcome of the exploration showed a discovery of 70 billion tons of the minerals, which will be a key factor for the future development of electric vehicles. Focusing on the level of unemployment, well, it has been fluctuating over the last 12 years, but it demonstrates that Norway always had a low unemployment rate, standing between the range of 3.12 in 2012 and 4.68 in 2016. So Norway always managed to adjust to economic shocks, which can be explained through the socioeconomic model, which includes high wages, excellent work life balance, which increases job satisfaction and moderates job turnover, and low inequality and wealth. Therefore, it shows Norwegians' trust in their government, which demonstrates higher incentives to contribute to their country's growth.
After understanding Norway's economy, we must examine its currency and monetary policy. The current Norwegian currency is the Norwegian krone, or crown. It was introduced in 1875 after Norway decided to join the Scandinavian Monetary Union, which was dissolved in 1914. Since then, Norway has retained the krone as its currency. Knowing the currency, we can start addressing Norway's money supply. We'll address the M0, which is base money, and M1, which is M0 plus easily transformable money equivalents. Regarding the M0 and looking at the graph, we see a sharp spike in 2020, probably a product of the COVID pandemic, and more recently a very significant spike in January 2024, which saw the M0 expanding rapidly to 159 billion kroner, and then the next month decreasing to the current level, which is 56% in decrease. Regarding the M1, we can also see a significant expansion of the M1 in 2020, which continued to grow rapidly towards 2022. However, since 2022, we have a trend towards the reduction of the M1, which coincides with a rapid increase in interest rates in Norway's fight against inflation. With the latest monetary policy report of the Norges Bank, we understand its goal in monetary policy, and I quote, "The objective of monetary policy is annual consumer price inflation of close to 2% over time. Inflation targeting shall be forward-looking and flexible so that it can contribute to high and stable output and employment." As we can see here, the objective is to ensure controlled inflation and stable growth. However, the 2% figure is flexible when necessary to preserve other factors. To achieve said inflation rate, the Norges Bank uses different tools. The main one is the policy rate, which is the most important interest rate. Because of the post-pandemic economy, Norges Bank applies a 4.5% rate to combat high inflation. Then they measure the inflation with the CPI ATE, which is CPI adjusted for tax changes and excluding energy products, which sits at 4.9% for February 2024, of which is a 12-month increase, which remains high. Also, Norges Bank evaluates employment levels and output cap. It aims for high employment, but understands the consequences of total employment, so the bank is willing to accept increases beyond the higher limit as long as inflation remains close to 2%. As soon as employment drops below the threshold level, however, the bank enacts expansionary policy to fight the negative gap, which is consistent with Norway's high employment rate. For reserve requirements, Norway's bank applies a 3.5% rate to deposits, contrasting with the last decade, which is had it under 1% and in many cases 0%. Once again, this is consistent with Norway's fight against inflation, reducing commercial banks' ability to loan money through fractional reserve banking mechanisms. About unconventional monetary policy, Norway does not apply negative interest rate, neither QE, since Norway's wealth and wealth fund have helped it keep low debt figures, making QE unnecessary. As such, evaluating Norway's monetary policies, we can understand that Norway's bank is quite conservative. The goal is to maintain long-term stability with constant growth and ensure citizens enjoy reasonable lifestyle improvements.
Moving on to Norway's financial system, let's give an economic background. Norway's strategic position in Northern Europe, particularly its access to the North Sea, has enabled it to exploit significant oil and gas resources during the 1980s. As of 2023, petroleum activities have generated about 986 billion Norwegian krones, accounting for 49% of Norway's annual revenue. Norway's financial system is designed to ensure economic stability, prosperity, and facilitating interactions among various economic agents. The Norges Bank. As a central bank, the Norges Bank is pivotal in managing Norway's monetary policy and financial stability. It sets the interest rates for bank deposits, which influence the broader economic rates. Additionally, the Norges Bank acts as the lender of last resort, providing liquidity to banks in crisis situations and requiring collateral for all loans to mitigate credit risk. Moving on to financial markets and instruments. The financial markets in Norway, including money markets, bond markets, and equities, are integral for facilitating the trade of financial instruments. The Norwegian stock market, Oslo Borg's Euronext, plays a significant role, with various local government entities, finance, and insurance companies participating. The Norges Bank, Norway's central bank, manages the liquidity in these markets, ensuring smooth operations. Government cash flows impact liquidity significantly, with the Norges Bank adjusting market operations to maintain the balance. Concerning Norway's financial institutions, they are controlled by the Norges Bank, supervising the entirety of transactions made between agents. The Norges Bank also serves as the government's banker, managing activities like government borrowing and issuing bonds. It ensures that government transactions are facilitated efficiently, though these activities do not appear on the bank's balance sheet. Insurance companies, pension funds, and regulatory bodies are here to manage risk for investments, ensure a wealthy future for upcoming generations, and regulate the institutions. The financial infrastructure in Norway. Norway's financial infrastructure supports the smooth operations of payments and securities settlements. Systems like the Norges Bank Settlement System, named the NBO, and the Norges Bank Interbank Clearing System, the NICS, are essential for recording and facilitating transactions between banks. Elements like the CCPs and the ESOSL have been created to support the agents in case of deficient trades, ensuring stability of the financial system.
Now, moving on to Norway's current government, Norway is more left wing and has more left wing views that are characterized by ideologies emphasizing social fairness, environmental protection, and economic stability. There are many parties in the government. However, I'm going to be focusing on the three main ones, which are the Labour Party, the Centre Party, and the Socialist Left Party. The Labour Party mostly focuses on workers' rights and strong welfare, and they definitely try and reduce income inequality by advocating progressive taxation, whilst the Centre Party kind of prioritizes fairness and environmental protection and rural development. And basically, they kind of try and support agriculture and decentralized power. And lastly, the Socialist Left Party also advocates kind of for universal healthcare and welfare distribution, but they mostly promote social justice and try and kind of challenge corporate influence. Now, moving on to the government's intervention of state, there are kind of three main initiatives that the government takes, three main categories, and these are economic intervention, social welfare initiatives, and environmental sustainability. Under economic intervention, Norway combines state involvement with market principles, managing natural resources, especially oil, and this was kind of talked about previously, but oil revenues contribute to the government pension fund for future generations. Moving on to social welfare initiatives, they kind of have progressive taxation funds, healthcare, education, social services, and have a very a comprehensive social net that includes unemployment benefits and childcare support. And lastly, environmental sustainability. They have many efforts to combat climate change through investments in renewable energy, as renewable energy is very popular in Norway in general. And they just try and support entrepreneurships and diversification of the economy. However, there are also many challenges that Norway is facing for future directions, including their reliance on fossil fuel exports that possesses economic and environmental risks. Also, the need to diversify the economy and reduce inequalities between regions in Norway. And lastly, the commitment to economic stability, environmental preservation, and social justice remains very crucial for Norway.
So now about the public spending in Norway. So Norway maintains a high level of public spending, including large investment in healthcare, and education. This dedication to social services offers a strong safety net for its residents, helping to maintain one of the most greatest living standards. The government judicious use of oil earnings have resulted in sustained and equal distribution of wealth. So first of all, road to social and economic harmony. So Norway's public spending is significantly higher than many other nations and countries, showing its commitment to social welfare and guaranteeing a high standard of living for the whole of the population. The substantial investment in healthcare, education, and infrastructures helped Norway maintain its position as one of the world's greatest social progressive countries. Moreover, following the economic collapse of 1992, Norway launched a deliberate attempt to revive the economy through strategic planning and investments. So the government aimed to diversify its sectors beyond oil and gas. Like they've developed its welfare system to promote innovation. Norway's high public expenditure is supported by a combination of government programs and progressive taxation. Moreover, so about the taxation and revenue growth. So between 2018 and 2023, the Norway enjoyed a strong economic expansion with growth growth by advancement and innovation. The COVID crisis presented Norway with unprecedented programs necessitating rapid government actions to protect public health and elevate economic impact, like every other countries. The government invested significant resources to finance social programs, ensuring individual has a strong safety net in times of need. And Norway has seen a consistent growth in employment possibilities, demonstrating the stability of the economy and initiative to boost labor participation. Finally, the political influence. So Norway has a strong and stable political system distinguished by a good governance and a dedication to social welfare. The current Prime Minister in Norway is Jonas Gahr Store, who represents the Labour Party and Centre Party, which controls the economic coalition's government. The Norwegian government future course will be determined by a variety of variables, including electoral outcomes, policy goals, and international dynamic, with the fact that Norway is no longer in the European Union.
So, Norway, being part of the main Nordic countries, which are Denmark, Finland, Sweden, Norway, and Iceland, is an advanced country with high income and very well connected. It is modern and considered as one of the world's wealthiest countries, with an evenly distributed GDP per capita of $106,148 in 2023. The Norwegian economy features a combination of free market activity and some government intervention in areas such as the petroleum sector or some large scale state enterprises. This country is a leader in producing offshore energy, such as oil, gas, and wind, as well as green technologies and consumer goods sectors, amongst others. Norway's trade relations and exchange rate regimes have evolved significantly over the years, influenced by domestic economic factors as well as global developments. The Norwegian krone was introduced in 1875 as the official currency, and because Norway's economy was severely impacted by World War II, the Bretton Woods system pegged the krone to the US dollar's value under fixed exchange rates. After some economic fluctuations in the 90s, Norway decided to allow the krone to float freely against other currencies. And there were some liberalization efforts, like including the participation in the EEA, which expanded Norway's access to European markets. And nowadays, the exchange rate of the Norwegian krone is almost 11 per $1 and almost 12 per euro. Even though the Norwegian economy was affected by the financial crisis from 2008, the economic downturn and problems were way less severe than in many other countries. This might be also for because of the rapidly increasing demand from Asian emerging economies such as China and India, which made the country recover pretty well and swiftly from the financial crisis of 2008. Norway has a very open economy, with trade representing more than 70% of its GDP. Traditionally, Norway exports energy intensive products and imports high technology items, and fish was the main export in 2022, representing almost 22% of the total, followed by manufactured goods and fuels. The country's main trade partners are generally members of the EU, with 67.5% total exports and 55.5% total imports in 2022. In terms of countries, Germany was the main destination, followed by the UK, France, Belgium, and the Netherlands. As for suppliers, Sweden was the main one in terms of goods and services, ahead of China, Germany, the US, and Denmark. Exports from the EU to Norway are mainly dominated by machinery and appliances, as well as transport equipment, while mineral products represent around 42% of EU imports from Norway. And with a 27.4% share, Norway is the biggest exporter of fish and aquaculture products to the EU, followed by China. As a member of the EEA, Norway fully applies the whole EU acquis communautaire principle, which is relevant to the four freedoms, which is the free movement of goods, people, services, and capital. Additionally, as a member of the EFTA, which is the European Free Trade Agreement, um, Norway can negotiate a free trade agreement with a respective third country via the EFTA, even if they're not in the European Union.
So, in terms of trades, Norway is well implemented in the world and does exchange a lot with other countries in EU and outside. So, as Norway opens up to international trade and investment, the exchange rate becomes a crucial element when assessing the country's economic health and responsiveness to external shocks and stimuli. In 2022, Norway managed to reach its highest level ever of with 83% of GDP. So when we talk about trade as percentage of GDP, we are examining the significance of international trade in relation with the economic performance of a country. So here in Norway. Thus, we can affirm that with 83% of GDP, Norway has a great dependence on international trade for growth and development. When dealing with trade and exchange rate in a country, it is crucial to have a close look on both the current and capital accounts. So in 2022, Norway's current account was equal to 29.4% of GDP, which is the sum of the net exports of goods and services, the net primary income, and the net secondary income. So here, as we say before, we have a positive value, which signifies a surplus, meaning that Norway is exporting more goods and services than it imported during the period. So having a surplus is highly beneficial as it positions the country as a net creditor to the rest of the world, implying that it has accumulated financial assets abroad. Now we can focus on the capital account, which reached in 2022 negative $291,211,992. So the capital account is the part of the balance of payments that records all transactions made between entities in one country with entities in the rest of the world. And these transactions consist of imports and exports of goods, services, capital, and transfer of payments such as foreign aid and remittances. So in Norway, as we said, it registered a deficit, meaning that more capital is flowing into Norway than going out, and it may come from factors such as foreign direct investment, portfolio investment, etc. Additionally, Norway is witnessing a depreciation of the krone. In fact, in 2022, it costed 10.32 kroner to buy 1 euro, and in comparison, in 2023, it costed 11.88 kroner to buy 1 euro. So hence, the krone has depreciated by over 9%. And this phenomenon is a concern in various sectors. First, for consumers, it means that they will pay higher prices for imported goods and suffer from more expensive holidays abroad, for example, as their currency, the krone, is weaker. In the business sector, many companies suffer from a rise in prices for imported intermediate goods. However, some other companies, mainly in the tourism and trade field, may discover that demand rises and profitability improves when the krone is weaker.
Overall, Norway is known for its economic stability. Its economy is mostly built in smart money management, stable financial systems, and active participation in global trade. Norway's economy is built mostly based on the imports and exports of the two most prosperous industries, the oil and gas industry. Its resilient and strong economy benefits their citizens and ensures a bright future for next generation as well. Thank you for listening.